The challenge of encouraging business to invest in Pacific Island nations has often proved to be hard work, with many potential investors seeing the area as a backwater. Distance from markets, shortage of capital and corrupt ministers driven by self-interest have also played a part. It's been a matter of concern for the Asian Development Bank, which says its efforts to revamp business law, improve access to finance and overhaul state enterprises are beginning to pay dividends. Scott Alley reports.
Beneath the allure of some of the Pacific's island paradises lies economic malaise and grinding poverty. Among the Asian Development Bank's 14 Pacific members, annual growth ranges from commodity-fueled rates of 10% in Timor-Leste to the stagnant economies of Cook Islands and Tuvalu. Delegates at a conference organised by the bank heard of the positive impact of technological and business law reforms.
We have made in two countries it far easier to register a business. We've made it far less expensive. And one of the things that encourages us most about these reforms is the speed at which new companies have been formed following the change.
Last year, the ADB allocated $86 million to support growth among the region's divergent economies. But that's just a trickle compared to the flood of capital coming from China. Toward the end of last year, Beijing pledged an additional $2 billion in so-called soft loans and funds earmarked for infrastructure for Pacific nations. That's on top of projects like the $1.5 billion Ramu copper mine in Papua New Guinea, owned by a Chinese state-owned enterprise. Paul Holden acknowledges while massive Chinese investment is creating tensions, mainly with its rivals, it must meet several important conditions.
The key to that is looking at debt structure. When looking at large-scale investments, it's looking at ensuring that local regulations are complied with, and it involves making sure there's a real demand for the type of investment that is occurring.
But countries like PNG still rate highly with perceived levels of public sector corruption. It came 144th out of 175 nations analysed in the Corruption's Perceptions Index published last year. But PNG is not alone in experiencing governance problems. There has also been international concern about the Solomon Islands, Fiji and Vanuatu. Public sector expert Christopher Russell says reforms are making a difference, with state-owned enterprises now focusing on commercial priorities with political manipulation less prevalent.
The lessons learned about what drives good SOE performance is universal. You know, what drives good SOE performance in Australia, New Zealand, Europe, America, they're the same fundamental issues. But in the smaller island countries, what you tend to see is the impact of reform happen more quickly.
But the reverse is also true. Any damage occurs faster as well, something any incoming Pacific Island government should keep in mind.